Let's talk about one of the most exciting and advantageous uses of a reverse mortgage. It's called the line of credit. Even though your cash flow and your investments may be just fine and you have quote unquote plenty of money for now, 20 to 30 years of retirement is a very long time. You may find that it's very prudent to ensure that a portion of your home equity, an essential part of your nest egg, is readily available in cash without having to sell your home or try to go out and get a mortgage at a difficult time in an emergency. Your financial advisor has probably already encouraged you to have a line of credit for unexpected or planned purchases or shortfalls in cash flow. That might have been fine back in your 20s or your 30s or even your 40s or 50s, but it's a little bit dangerous when it comes to your retirement years, because when you take money out, you have to pay it back. It can be canceled at any time depending upon what's going on with the economy or your own personal situation. A HECM reverse mortgage has a clear-cut advantage over those traditional credit lines that you've known about in the past because it has a growth feature and it cannot be canceled unless you don't pay your taxes on time. So it's always available. And the unused funds in your line are guaranteed to grow, regardless of what's going on with the general economy. So if you take out a HECM at age 62 instead of 82 and you leave the funds to grow, instead of using them, it's possible that the credit line could grow to be even higher than the value of your home, especially in areas of the country where home values don't increase substantially. In fact, you could potentially have a substantial credit line available in your later years when you may need it the most. You can draw out that home equity and still live in your home by only paying your necessary home expenses such as taxes and insurance and home maintenance. This is an example of kind of having your cake and eating it too. This was important in our family. My father had a stroke at 86. My mom's Alzheimer's kind of went over the cliff. And while it was a very difficult time for our whole family, it was very nice and comforting to have that line of credit that we could pull money out to take care of mom and dad at home. And it's totally okay if you don't need the money right now. In fact, you might be able to use it for fun things, hopefully not bad things like health problems. But that's the whole point of having an available line of credit. You can proactively use the credit line as a standby resource for any future needs. Maybe you want to bridge the Medicare gap from 62 to 65 when you don't have health insurance, or to pay for life insurance or long-term care insurance. So I get it. I've dealt with hundreds of families. Everyone has a different situation, different sets of needs, wants, challenges, dreams, and desires. In fact, you may think, well, this isn't really for me. This is for somebody else. Well, if you think that, it will be well worth your time to meet with one of our reverse mortgage planners to receive a personalized, no obligation consultation to see if maybe a reverse mortgage just might be right for you and for your family. Don't neglect this opportunity. It might make a huge difference not only for your retirement, but for the legacy to your family.